Good afternoon, ladies and gentlemen. It's a pleasure and honor to be here with you again in the Kingdom for this year's FII. And please, for those of you who would like to stay with us for this session, kindly take your seats so we can start. So we are here this afternoon. Over the next hour, we're going to discuss the shift in the geography of investments, especially from west to east. We have with us an esteemed panel of speakers. Let me introduce them, and then we will talk about the topic. Please join me in welcoming on stage Mr. Walid Lemheri, Investment Committee Deputy Group CEO and CEO of Alternative Investments and Infrastructure at Mubadala of the UAE. We have with us also Mrs. Tong Li, CEO of Bank of China International of Hong Kong. We also have with us Mr. Saleh Rumeh, Managing Partner at Softbank Investment Advisors of the UK. Also with us is Mr. Alberto Galassi, the Chief Executive Officer of the Ferretti Group of Italy, and Mr. Sultan Ahmed bin Slayem, the CEO of DP World of the UAE. So ladies and gentlemen, thank you very much again for being here with us. Now let us start our discussion. The surge in new technology investments out of Asia has grown to nearly match US-based innovation capital. According to a joint study by PwC and CB Insights, total VC funding has increased by 50% in 2017 year on year. Yet, the growth in Asia surpassed the United States with a 117% jump year on year, driven mainly by the Softbank effect, and we're going to talk about that. Will this shift in funding geography change the balance of innovation priorities? And how will the increase of global tech investment change the nature of invention to reflect regional characteristics, economic goals, and strategic interests? So I would like to start, ladies first, with you, Ms. Li. You are coming from Hong Kong, so you can give us a better idea from Bank of China, which basically is one of the biggest banks. You can give us a better idea of the investment opportunities available in China right now and also going forward.
Thank you. I'm very honored to be invited here to meet you again. Last year, I was here and shared many insightful views with many friends. And we all know China is transforming towards a direction of technological, intensive, and consumer-driven economy. So with this background, I would see the opportunities of investment come from the high-end manufacturing and service sectors. Service sectors has now taken up around 51% of China's economy. So it's, I suppose it's the huge potential of investment should come from the sector. In detail, the tourism, education, and design, R&D, and some, some cultural sports, or the population change you have already noticed. China is an aging society, and also 2 years ago, it has launched the second child policy. So it's not very, not very simple policy. This policy will bring 50 million to 80 million babies to us in the next decades. So it's, the service demand potential, how huge is that? So I would suggest that this sector should, we should focus on. And the other one is the high-end manufacturing. High-end manufacturing driven by three factors: technology innovation, consumption upgrading, and green development. So I have just collected some figures I would like to share with you. In high-end manufacturing, China has stepped up investment in high technology industries to foster new growth drivers. Between 2013 to 2017, a total of 1.5 trillion US dollars was invested in high technology manufacturing, representing an average annual growth of 15%. And with the increasing income and improved lifestyles, consumers have higher requirements for the product quality and personalization. So I would also take a example from the car market. From this market, you see the new energy vehicles, which can just say it in NEVs. From the, for the recent years, it has gained the growth speed. Guess what? It's more than 40% annually. So it's quite significant. So far outperforming the narrow sense passenger car market. And in green manufacturing, a powerful boost comes from China's firm commitment to pollution control, one of the country's top priorities. China's greater efforts to increase energy efficiency and protect the environment will create opportunities for business in fields such as clean energy, smart monitoring, ultra-low emission technology, pollution source treatment, environmental equipment, and equipmental services. This is the main two directions I see for the potential of investment.
So you laid the background for the industries and the sectors that you think are interesting going forward.
Yes.
Let us zoom in on one of these sectors and ask Mr. Galassi, who is in the luxury segment, basically. Can you describe to us how has the geography of the luxury industry shifted over the past 10 years, and what do you expect going forward?
Thank you. First of all, thank you very much for the privilege and the honor of being, I would say, the only Italian as a speaker here today. And congratulations for this fantastic FII initiative. And I will answer quite quickly. The world changed dramatically in the past 10 years. The big crisis of 2008 saw a different geography and a different map. To give an example, Ferretti Group, which probably has the best brands in the world, I shouldn't say this, but Riva is 175 years of history, was selling 40% of the revenues between two countries, Italy and Greece. Now, you can imagine Italy and Greece today are considering, Italy, I considered it as an emerging market. It disappeared from the scene all of a sudden, and we're now selling in 80 countries. And let me tell you, the world is switching and turning eastbound. Middle East is a very, very important market for us, and East and Far East is very important. Now, it's shifted geographically, but it's shifted also in terms of the quality of the customers and the age of the customer. To make an example, there's a new generation of these, what we call millennials, with important wealth, which are approaching the luxury business. And there's a lot of technology behind the beautiful design of Italian boats. So they are both attracted by the design and the technology, and they come and approach us. So when my IT team, I make an example, I always quote, and my communication team came to me and said, Mr. Galassi, we have to make an important investment for the future in communication, and we have to invest in social media. We have to be #1 in the business as we are today. I'm totally analogic, and I have to say something. I'm completely behind the schedule in terms of technology. So if I change my iPhone, it takes like 3 weeks to fix myself to the new one. So I looked at them and said, are you serious? You really want to try to convince me that this is a nice way and a good new way of promoting boats, ships, and with the value that goes from 5 million to 50 or 60 million? And they said to me, yes. And if you want to know the way it ended, I was absolutely wrong, and they were absolutely right. We ended up selling boats of people that found us on social media. So to conclude, it changed geographically, eastbound, definitely. Everything is moving east, and the compass of my ship, Ferretti Group, is towards east, 100%. And secondly, it changed in terms of quality of the customer base and age of the customer base.
So basically, we realized that we see the shift in demand, the high demand coming from Asia, and basically it is shifting the business of companies. I spoke about tech investments and investment in VC, venture capital. And in the figures that I mentioned, I said that a big reason for the jump in expenditure on VC spending in Asia is the Softbank effect. So can you tell us, Mr. Saleh Rmeh, what are the opportunities? Why this focus on Asia? What are the opportunities that you see in Asia and other frontier markets?
Sure. First of all, thank you for having us. I found the responses very interesting because we're noticing the same trends. When we talk about emerging markets, when we talk about frontier markets, I think that's almost a bit of a misnomer because from a technologist standpoint, we're starting to see trends and shifts that suggest that those are no longer emerging markets. For example, if you look at demographics, rising wealth, the youth population, if you look at smartphone penetration in those countries, they're rapidly growing. So whether, historically, the frontier markets or emerging markets represented Latin America, Southeast Asia, parts of Africa, that is changing very, very rapidly because of the advancements of technology in those regions. So for us, we no longer see those markets as simply frontier markets. They have become sort of core markets for us. The question becomes then, how do we operate in those countries? How do we penetrate those countries? If you look at our fund, we've only been incepted for 18 months. We're still a young fund. However, our parent company, Softbank Group, has been around for many years, has been investing for a very long time, and investing in many of those frontier markets. If you look at the portfolio of companies that we have in Softbank Group, starting with companies like Sprint, Yahoo in Japan, SoftBank Mobile, and others, we're probably touching close to 1 billion consumers around the world. So by definition, we're reaching into all the pockets of the world, touching all the pockets, including some of these emerging markets and frontier markets. And then if you add to that the Vision Fund's investments, and thanks to our partners, the PIF and Mubadala, we've made great progress and we've built up a portfolio of around 65 companies already. Those companies themselves are moving very quickly in their global expansion and starting to penetrate each of these frontier markets. So, technologies move, we all know that technologies moves very, very quickly, and what we're finding is that even the frontier markets are starting to become core markets for us, and we're not differentiating between what might be called frontier markets versus core markets. That's important. And as to how we go about doing it, we obviously have to build up a presence in those markets. Softbank Group has always maintained presence in markets such as Korea and other places to reach into the different pockets. And then the Vision Fund now, I'm pleased to say we've just recently opened an office in Saudi Arabia itself, in Abu Dhabi as well. We've opened offices in Singapore. We're opening offices in India to be able to tap into these different pockets. So in short, Nadine, these are core markets for us. We're very focused and we're very optimistic about the opportunities in these markets.
We're sure following up on the SoftBank news because a lot is happening lately. So we're going to get back to that. Mr. Walid Lamheri, I would like to ask you about, I will not designate the markets emerging or frontier. Let us talk about Asia. How important is Asia? Is it a key feature in your present and future investment portfolio as well?
Thank you. Thank you for the question. But before I answer it, I'd also like to add my thanks to the event's organizers and to PIF for asking Mubadala to participate in this fantastic event today. So back to your question. So certainly Asia is incredibly important to us as an investment fund for a couple of different reasons. Number one, you heard something that was said that was incredibly interesting, and that is that when you look at the pace of technology development, no longer are you looking at just businesses coming out of places like Silicon Valley, right? And a few places coming out of Europe. What you're seeing is this incredible resurgence of R&D, which is being translated into great technology innovation, which is being translated into wonderful products that are being used and are penetrating every corner of the world. So now everybody knows about companies like Tencent. They know about Alibaba. They know about, all the very, very large companies, especially coming out of the scale that China is able to kind of create. And so what we've done is we've taken strategic positions in a lot of these different companies. And we've done that because, again, not only are you seeing the rate of development increase over time, but you're seeing real alternatives. So, for example, you may hear about core AI companies like SenseTime that are coming out of China, right? Very, very important companies that 5 or 10 years ago really weren't that dominant. And what you're seeing is that a lot of these innovations are either starting in any one of these hotspots that I've mentioned around the world, but really are spreading like wildfire. And the thing about Mubadala is that we want to participate in that growth. One of the points that I always talk about is people say, so Waleed, tell us, what is Mubadala's AI strategy? Right? People ask that question a lot. And I tell them, there really is no AI strategy, because AI is...
It's becoming everywhere. It's in all the sectors.
Well, that's exactly right. So AI isn't an end in itself. What AI is it's something that enables something else. So what I tell people is I say, we invest in the applications of artificial intelligence. And we look at those really important inflection points in those industries that I think can be influenced tremendously by AI. Let me give you an example. Right? And here's an example where you're seeing great development coming both out of Asia and the West, with no clear winner at this point, which is why we've taken positions in both sides of the world. So think about healthcare for the time being. One of the great applications of artificial intelligence is through image recognition, right? And especially in this part of the world, because of the prevalence of diabetes and diabetes-related illnesses, what you have is diabetes retinopathy. And so what you do is you have pictures that need to be taken of the back of a patient's eye. And oftentimes, you have live physicians who have to look at those pictures and then make a call about what the diagnosis and the prognosis looks like. In this case, you're seeing AIs being trained with these images that we're taking, and you're seeing hit rates that are much, much more accurate than the physical doctors. And it's revolutionizing medicine. You can see that this is going to revolutionize not only things like image recognition, but think about lab work and pathology. So right now you have incredibly specialized people that are looking at slides to identify, God forbid, cancer tumors or whatever it may be. Soon you're going to get to a point where machines and artificial intelligence will be making those diagnoses based on the slides and based on the images that are taken. So from our perspective, we are unbelievably excited about taking positions in these companies, whether they be in Asia, whether they be coming out of Silicon Valley, or frankly, anywhere else.
Just a quick follow-up question. Do you think that this activity in this space that we're seeing in Asia, is it a top-down approach? Is it because the governments are putting the right policies in place, or is it, how do you explain that?
So I think it's a lot of different things. Certainly, I think the government is spending a lot of time encouraging national champions. And you can see that, right? But the other thing that you see is that you see China is also incredibly competitive. And so you see competitors rising very quickly. And I think the policy is just make sure that the best, most competitive company wins. And so, I'll give you an example. We've taken a large position through our position in Softbank in a Chinese ride-sharing company called Didi, which even until today is really quite dominant, but they're innovating so rapidly that, we think that they're going to be a winner. But you're seeing these other companies pop up to try and take share away. So very exciting stuff.
Mr. Sultan bin Slayem, I know that although you are in the ports business, but DP World is making a lot of investments also in technology. So tell us about that, and also this shift in the balance of innovation towards the East. What do you think is the impact of that ultimately?
Thank you very much. First of all, I'd like to congratulate the Kingdom of Saudi Arabia in this amazing conference, and thank PIF for organizing it and inviting us. In our business, technology is very important. Technology drives every business today. How do you use technology to become efficient? In the cargo business, we need that. And I will give two examples. One of them is Hyperloop, where we heard of a system that can transport cargo and passenger fast. And it is similar to an airplane. When we visited them, we found out that's an interesting technology, and we start to buy into the company. Today, we are the major shareholder of the company, and through that technology, we were able to really identify many applications that are helping us in the port. For example, one of the conditions is you need in the port to put a container in the loop every 5 seconds. We have no equipment that can do that. So we took us about almost a year to create a system ourselves, thinking out of the box, and we managed to do it. But that is an application that is helping us today in the port, which will transform our business in an amazing way. So definitely with Hyperloop, it's going to help the cargo. Now, we've been in Saudi Arabia for 20 years. Saudi Arabia has an amazing location, both on the Red Sea, which 10% of the world shipping pass in front of it, and 90% in front of Jeddah, and in the Gulf. And so when you look at what China is doing with Uber, and we're looking at how this region can take advantage of it, we believe that using our unique technologies, we can capitalize in making Saudi Arabia, and Jeddah in particular, an efficient cargo hub. We have managed, and we tried actually, where I sent a truck last year. We had a truck and tell him, go to Berlin, see how much time it takes. It took 7 days, almost 8 days. From Saudi Arabia to Iraq by truck, then North Iraq into Turkey and Berlin. So now, our business is really delivering cargo efficiently to our customer. We're no more in the port only. Our business starts from the exporter till the consumer. So this is something we could offer that we didn't know. Another technology we are creating ourselves is blockchain. We collected the smartest people in supply chain and retail, and we created one of the most efficient systems. And what we're trying to do, which is the blockchain is live, and we're launching it next year. We tried it already. What we will do is we will put, for the first time, the cargo owner, the trader, in charge. Today, the trader doesn't know what happened to his cargo. So when you look at these technologies, they're going to reflect an efficiency. For example, when someone imports a container, the total cost he pays, freight is only 40%. 60% is unknown. People pay it because it is paperwork, it's documentation. It's going to give transparency, and it is helping us as a company to deliver cargo faster. So today, this region was a knowledge importer. This region is becoming a knowledge exporter with the technologies that we're utilizing in our system.
That's what we want, actually. It's amazing to hear what is happening in that space. I would like to go back to discuss China with Mrs. Li. You come from the financial services industry, so could you tell us, please, what are the regulatory changes that are underway in China that could impact the future of the financial services industry?
It's like in our home, we need to do a cleanup first, then invite our guests or friends come in and have party. So it's like we are doing this. For the first move, cleanup, China has a strengthened regulation on some issues like shadow banking, off-balance sheet activities, and China has also adopted a prudent monetary policy and had made deleveraging, and the process has been underway, and we have made much remarkable progress. Unsustainable leveraging expansion has been curbed in China. So this actually is a cleanup for the financial industry to create a better, sound financial business environment. And the second move is to invite friends in. So, you know, China has opened its door wider and wider. So financial industry is far more open currently. I have some detailed policies. China has been significantly improving the access to financial business for global financial institutions. For banks, China has removed the cap on foreign ownership in banking sector. Foreign banks are allowed to carry out almost the most of banking services in China and will be treated equally. For security firms, mutual fund management, futures, insurance, China has raised the cap on foreign ownership ratio in these non-bank financial institutions to 51%. That is unprecedentedly this year, and plans to remove all the restrictions 3 years later. At that time, you can have a wholly owned security firm in China.
But Mrs. Li, if you look at the headlines coming out of China, I mean, when you talk about the financial services industry, I mean, the biggest issue is the shadow banking, is the high levels of leverage.
Yeah.
Do you think that the steps that are being taken are the right ones to mitigate those risks?
Yes. You know that China's action has from not this year, from the beginning of last year. So the many issues have been settled, and you know the potential risks for last year has already exposed. So now the financial industry, I mean the security, from security perspective or from the quality perspective, much better than before. So this is already, it's a good timing to invite our foreign investors to come in China and to do business in China and to share with China's growth.
I'm sure the importance of the Chinese market for this part of the world is such that we see in this FII this year the presence of the Chinese delegation as speakers as well. Mr. Galassi, I'd like to ask you, you spoke a little bit earlier about how demand has shifted and your business has shifted eastwards, but my question is, how does it impact your business in the sense that do you take their likes and dislikes into consideration in your product innovation? So how is it impacting the way you do business and your innovation?
Well, the big difference between the old Ferretti Group and the new Ferretti Group, and we invested more than 100 million in 3 years in R&D. It means nothing in automotive. It means nothing in aviation. It means a huge amount of money in the luxury industries of yachts. The big difference, in my opinion, is you have to consider we have 7 brands. We sell in 80 countries. So the Americans, to make an example, they like to barbecue and enjoy air conditioning. The Italians, they like to suntan like the French. In the Middle East, they like to enjoy with the families. In China, they don't swim. They don't suntan, and they use boats only for, I would say, leisure, for partying, or for business. So you have to adapt yourself to different brands and different styles. You know, but there's one thing I want to say about brands. Brands, I think, is the big difference between a successful luxury company and a non-successful one. You need to have a brand, and you need to have the love and the protection for the brand. To make an example, in this country, Kingdom of Saudi Arabia is becoming a brand. It's a brand already. Abu Dhabi is a brand. Dubai is a brand. The UAE is a brand. So in this part of the world, there are brands which are existing, which are driven and successful because of the vision of the leadership. The same thing, me as a CEO, I'm trying to protect the brands we have and to compete and win against the others. Riva is 175 years old. It's loved from Japan to South America, from Angola to Australia, from Italy to Saudi Arabia. The question is, how do I protect it? How do I preserve it? How do I make it better for the next generation? My job is simple. I have to protect it and give it for the next generation. Sometimes I feel like a lucky leader of a lucky country. And again, it's a privilege once more to say such a thing in a country like this one, which is growing, booming, developing in a successful way.
Mr. Saleh Rumeh, I remember like a year and a half ago, I met Mr. Masayoshi Son, and I asked him, you are a firm believer in disruption, in technologies. How do you hedge your bets? Like, how do you make sure that this does not go wrong? And he said, we never hedge our bets. I said, why? He said, because I'm very sure that the technologies that we choose are the right ones and we are making the right investment decisions. So in that sense, And you know, he is a flamboyant character, so the way he says it is really impactful. I would like to ask you, in that sense, what is the investment philosophy of SoftBank in technological change?
Sure. Let me try to simplify it in a way that the audience can understand. We have some very basic principles that we look for in all the companies we invest in. I think first and foremost, and this goes to your earlier point, we look for the entrepreneur's character. That's very important. That's important because, first of all, we are management friendly, we are entrepreneur friendly. So unlike the typical private equity firm that comes in, tries to drive out operational efficiencies, that's not what we're interested in. We have to believe in the entrepreneur. So in all the companies that we invest in, there's one common thread, is a brave, visionary entrepreneur. That's number one. Number two is the company has to be in sort of a leading position. You're right to mention that we don't hedge our investments, but effectively, if you're backing an entrepreneur that you believe in, and that company is in a number one or number two place in the respective segment, you've gone a long way to hedging your investment, right? And what we then do, our role, thanks to our partners, the PIF and Mubadala, is to tell them that we have patient capital backing them through every phase of the growth. That's what we do. So the mantra to a lot of these companies is, don't worry about solving for the bottom line, cutting costs, and trying to become profitable as quickly as possible. The mantra we give them is grow, 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 get market share. And in the technology business, that's particularly important because market share begets market share, right? There is a critical point where if you have 70, 80% of the market share, the amount of information that you can gather in some of the key platform businesses, for example, ride sharing being a very good example of that, you can dominate the market. So the most important thing we tell them is keep growing and don't worry about having to turn a profit and don't be in a rush to do so. That's the instructions we give to our boards, and that's the support we give. What we also look for is it's important that the underlying businesses, because of the size of our fund, has to be a large market. In technology, we often use the word TAM, which refers to the total addressable market or the whole entire size of the market. That in itself has to be big. And that's what we're looking to disrupt. So what we look for are companies that are capable of disrupting the way business is traditionally done in those sectors. Because ultimately what we're looking to do is help companies improve their products and services for one simple reason, and that is to empower the consumer. So we feel that if we can ultimately improve our products and services of our companies to empower the consumer, we've gone a long way in disrupting that sector. And that in a nutshell is the way we approach our investment philosophy. And we've managed to make a lot of progress so far on that front.
Mr. Walid Al-Mehri, Mubadala is backing SoftBank, is investing with SoftBank, right? But tell us, what are your investment priorities at Mubadala right now and going forward as well?
Sure. So we are, as you said, large investors in the SoftBank fund. We have invested $15 billion together with our partners, PIF and others. And that, in many ways, is the cornerstone of our future-looking strategy, in the sense that ventures is an incredibly important space for us. Because ultimately, it's not sector-specific. It's technology, right? Which means it's healthcare. It's how do we disrupt industry? How do we look at real estate? How do we look at all these different areas? But a few other areas where we have devoted both capital and expertise in are areas like pharmaceuticals and biotech, where we formed a new team and we're looking at opportunities. Agribusinesses. So that's another exciting area for us. And frankly, there are many others. But at the end of the day, what we try and do is we try and look for large demographic trends. We look at big shifts around the world, and we try and find opportunities in those spaces. So each one of them, whether it's technology, whether it's biotech and pharma, whether it's agribusiness, or any of the other new things that we look at, are looking towards the future as we try and make financial gain and sound investments.
Mr. Sultan bin Sulaim, we are here in you are Emirati, and Mr. Mehri as well, and we are here in Saudi Arabia, and we are talking about the technological changes, and we see that there is a push for investing from both countries in the future, basically. So you think, what are the opportunities, do you think, for Saudi Arabia and the UAE in this new digital age?
Well, definitely, there are many changes happening today. But the key thing is really, we get a lot of data. Data is of no use until it becomes knowledge that can be transferred to make right decisions. In our business today, it's all about information. We have to find, in our case, we are a global company, so we're not just in Dubai. We have 80 terminals around the world today. And the key for us is really, how do I find value for my customer? We're no more, in the past, our business in the port, very simple. A ship comes, we take the cargo, put it in the yard, goes out the gate. And now, we redefined our customer. Our customer is not just in the port. Our customer starts from the exporter until the consumer reaches it. And then you get all these disruptions happening with the online trade and online business, which dictates very fast decisions, systems that need to adapt. You know, sometimes you have costs which are irrelevant. What we're doing today, we are no more just a port company. We're a logistic. We call ourselves trade enablers. Now, this region is so important for us because it is in the center of the world. Every ship going from the two big markets, Far East and Europe, passed from this area. So today, we are where the customer wants us. So for example, we have logistic parks in Kigali, in Rwanda, to supply that region because there are so much costs which are unrealistic. For example, and this is again, we are becoming proactive to find solutions for our customers. I'll give you an example. A container comes from China or Japan to Mombasa in Kenya, maybe $500 to $600 a 20 foot. From Mombasa to Kigali, in Rwanda, it costs about $5,000 to $6,000. It's unrealistic. It's almost 10% is just to bring it from China, and that is because of the inefficiencies in the supply chain. So what we need to do to capitalize in the opportunities is how to reduce these inefficiencies. Like in Kigali, we said, why don't we use the Lake Victoria and transport cargo by the lake, which will cut the distance in half and make the cost almost half. We're doing the same thing in India, where we're trying to do river transportation. So we find solutions for our customer. But in this area, still, in my opinion, the obstacles in the supply chain are there, and we need to make them efficient to take advantage of the opportunities.
Gentlemen, Mrs. Lee, thank you very much for a wonderful conversation. Thank you.
Thank you.
Thank you.